All right, team, let's dive right in. We're breaking down the Bitcoin market for December 20th, 2025. In the next few minutes, I'm going to give you a quick recap of how yesterday's forecast went down. And more importantly, I'm going to lay out my core thesis, my game plan for the next 24 hours. And here's the bottom line right up front. I'm putting it all on the table. The whole game plan is right here. I think this little pump we're seeing is the last gasp. It's designed to do one thing: wipe out the short sellers. That's why I'm convinced the real high probability trade isn't chasing this thing higher. No, it's about being patient and setting up for the reversal that's coming. So let's build the case for this step by step. So here's how we're going to do it. We've talked about the main idea. Next up, we'll check the tape, see how we did yesterday. Then we'll dive deep into the charts across different time frames. After that, we'll look at some on-chain data to confirm everything. And finally, we'll wrap it all up into a super clear, actionable playbook. Let's get into it. Okay, first things first. Accountability. You know me, before we can look forward, we have to look back. Let's grade my homework and see exactly how my last 24-hour call on BTC actually played out. So my call yesterday was for a push higher. I said the market was like a magnet being pulled towards a specific liquidation wall I had flagged at $88,110. And what happened? Well, the market delivered. It pushed right up to $88,386 and boom, triggered that exact short squeeze we were waiting for. The logic held up perfectly. All right, review's done. Now let's build our case for the next 24 hours. We're going to deconstruct this price action by, peeling back the layers of the onion. We'll look at the daily chart, the 4-hour, and the 1-hour. You got to look at all three to really get the full story. We've got to start with the 30,000-foot view. That's the daily chart. This is what sets the overall weather pattern. And for our plan, it shows us exactly where the major roadblocks are for this Bitcoin rally. Okay, so what jumps out here? Look right at that middle row. The 20-day moving average sitting pretty at 89,600. That, my friends, is the line in the sand. It's basically a giant brick wall for this rally. And notice the MACD histogram? It's still negative. That tells me that even with this recent pop, the underlying daily momentum is weak. The bears are still lurking. This isn't the start of some new bull run. This is a car driving straight into a wall. So, if the daily chart is the brick wall up ahead, you might be asking, what's driving the car? Well, for that, we have to zoom into the 4-hour chart. This is the engine room. This is where all that short-term bullish power is coming from. Now this is interesting. Just look at that MACD histogram value. A big, fat, positive 271. That's our confirmation right there. On this time frame, the buyers are completely in charge. They're just hitting the buy button and pushing this thing higher. The RSI still has a little bit of room to run too. This is the fuel for that final push we're looking for. The engine is running hot. Okay, finally, let's put on our magnifying glass and zoom in one more time, down to the 1-hour chart. This is where we look for the clues, the really early warning signs that this whole thing might be running out of gas. And there it is. See that? The first crack in the armor. That MACD histogram just flipped negative. It's tiny, just minus 3.63, but it's a huge tell. It means that while the 4-hour engine is still revving, right here on this immediate time frame, the car's starting to sputter. It's losing steam just as it's approaching that big daily resistance wall. That's a classic sign of momentum compression. So the charts are telling a very specific story, right? A strong short-term push is about to smack into a giant wall of resistance. And it's already showing signs that it's getting tired. But is that story real? Let's pop the hood and look at some on-chain data to see if it backs us up. And this just paints the picture perfectly. What you're looking at is a liquidation map. Think of all those bars as little pockets of rocket fuel. If the price just pushes up a tiny bit more, it will trigger a cascade of short liquidations. And look at that big spike right at 88,756. That's the magnet. The market has a massive incentive to go up there and grab that fuel before it even thinks about turning around. We know the target, but where's the horsepower coming from? Well, this chart, the CVD, shows us who's being more aggressive, buyers or sellers. And look at those huge green bars. Those are taker buys. That means people are not waiting for a dip. They are smashing the market buy button, chasing the price up. This confirms what we saw on the 4-hour chart. This is not a fake move. It's backed by real aggressive buying. Okay, but what about the risk? What's our backstop? This chart shows the max paying price for Bitcoin options. It's way up at $96,000. Now, in simple terms, this is the price where the big players, the market makers, cause the most options to expire worthless. So they have very little reason to let the market completely collapse from here. This gives me confidence that, yeah, a reversal is likely, but a total catastrophic meltdown? Probably not. And that helps us define our risk on the short trade. So, there you have it. The case is built. We've got a short-term rally fueled by aggressive buyers, aiming for a pool of liquidations, but it's heading straight into a brick wall, and it's starting to get tired. So the question is, how do we actually trade this? Let's put it all together into a playbook. I've broken it down into 3 distinct plans, kind of for 3 different types of traders. You've got Plan A, the scalp long, that's for the cowboys out there. Then there's Plan B, the sniper short, my personal favorite, for the patient hunters. And finally, Plan C, the income play, for those who just want to get paid to wait. Let's really focus on Plan B here, the sniper short. Because honestly, with all the evidence we just went through, I'm convinced this setup offers the absolute best risk to reward on the table right now. Okay, if you only remember one slide, make it this one. These are the exact parameters. The logic is simple. We're shorting the exhaustion of the rally right into that daily resistance. But, and this is the most important part, look at the trigger. This is non-negotiable. We don't just blindly short when it hits the zone. No way. We wait for a bearish divergence on the 1-hour chart. That means price makes a new high, but the momentum indicator makes a lower high. It's the market whispering, I'm tired. That divergence is our green light. Everything else, entry, target, and our get-out point is right there for you. Now, for those of you with a different style, here are the alternatives. Plan A, the scalp long, is super high risk. You're trying to catch that last tiny push to the liquidation target. It's for experts only. Then you have Plan C, which is much more chill. You're basically selling insurance against a total market crash by selling the $86,000 put. You're betting things won't fall apart completely, and you collect a premium for taking that bet. So, here's the takeaway. The market has pretty much shown us its cards. We've got a clear map of the battlefield, we know the target, we know where the fortress walls are, we know what's powering the attack, and we see the first signs of failure. The plan is on the table. The only question left is about discipline. So how will you execute?